Starts recording. So here we go. Hey everybody, Real Estate Ninja here. I hope you're doing great. We're going to talk about Truist Bank. We're going to talk about a problem that they have. We're going to explain what they're doing with their deposits, how it's a little, it's legal, but it's going to cause problems. And we're going to tie it into real estate. Also, want to tell everybody that has a real estate course, crash course, how to prepare for this upcoming real estate crash. There is a new lesson coming out tonight, so go take a look at that. And I put up 2 new ones 2 weeks ago. Go take a look at that. If you guys want a discount link, I'll put it below. Also, just so you know, 2 months from now, I'm going to start an entire section in that course on foreclosures. So the price you're seeing today, it will never happen again once that course is in. That it's going to be like a course within this course, all right? And it's going to be primarily set up for foreclosures. So go ahead and take a look at that if you want. All right, here we go. Out of Yahoo Finance. Now, this story is about 20, 30 days old, but it's very important because it tells the truth about not only Truist Bank, but other banks that are doing this exact same thing. This will also answer a lot of questions in your mind about what happened with Wells Fargo and why they were making up a bunch of fake accounts a couple of years ago. Remember that? And also remember this. A lot of banks do things that are illegal and shady because they know that the cost benefit far exceeds outnumbers the fines that the feds put on these banks. All right. This will lead to their collapse. I want people to understand that's why we're getting ready for a real estate crash, because as more banks collapse, that's fewer banks willing to make loans, mortgages into the real estate sector. That is going to add to more pressure. Look at what's already happening with cars. The default rate on loans is up to like 14%. It's doubled since February. Why? Because so many more car loan companies are pulling out. Same thing's happening in mortgages. All right. Truist stock drops as it wrestles with rising deposit costs. Now, just so you know, Truist is a big bank. Some of the country's biggest regional banks said Thursday that they attracted more deposits during the second quarter, and that's because the small banks were collapsing, so people were pulling money out of the small banks, putting it into the big banks. Very easy. This is what happened in the second quarter. But paid more for them, eating into a key measure of profitability. Now you're like, wait a minute, hold on. What do you mean they paid more for the deposits? Well, a lot of people on the logic side will be going, okay, well, there's advertising costs, carrying costs. When there's more deposits, maybe you need more personnel, things like that. That is not the key. That is not what is causing this added cost. Here we go. Truist stock, symbol TFC, dropped 7% after the Charlotte, North Carolina-based bank released its numbers. It also revised down its revenue guidance for the full year by 1% to 2%, citing lower net interest income, slower loan growth. They're not making as many loans as they used to, and lower investment banking revenue. It says here, there's a quote from their numbers. We're clearly at an inflection point in the growth rate. So the growth rates kind of changed materially. This is coming from CEO Bill Rogers, as he was telling analysts. Truist deposits did rise slightly from the first quarter and exceeded analyst expectations, but the cost it paid on those deposits rose 39 basis points. Here is the truth. Truist, every bank, let's start with every bank. Every bank has a certain amount of loans it put out. Well, by the guidelines it has to follow through the Federal Reserve, it has to have, based on the amount of loans it has out, it has to have a certain amount of deposits. So banks like Truist go out and they rent the ability to be able to put your deposits from another bank. Think about this, how crazy this is. You have your money with a bank, and if the bank sees that, hey, you know what, we're pretty flush with deposits, we did a really good job of advertising and conning people, we can take their deposits and put them on loan with another bank that has over leveraged itself, meaning that it put out more loans than it was allowed to. So it's renting your deposits. How do you feel about that? Let me ask you this. What do you think if we had a total banking implosion and some of these banks, like Truist said, we're done? And what happens with those deposits? Now, the documents, I'm sure, would say they're going to revert back to the bank that lent them. But you think the people at Truist will go, what happened? What do you mean? And they're going to have no idea. Like, oh, yeah, well, most of the deposits in our bank were fake. We were renting them. Isn't that insane? And the thing is as banks regress and get tight, the ones that are loaning their deposits out, they're demanding a higher rate. They're like, no, we want more. more interest on the deposits we're going to put out. Why? Because we're seeing you as a flight risk. So this is very close. It's similar to what happened in 2019 when the intrabank lending rate spiked to 12%. To give you an idea of how bad that was, during 9/11, the attacks on 9/11, the interbank lending rate spiked to 6%. During the Lehman Brothers crash, it spiked to 6.5%. But in 2019, 1 month before everything started out of Wuhan, it spiked to 12. It was actually like 12.5%. Highest it's ever been. That was catastrophic. So what happens is these banks that loan each other money or loan on deposits, loan out their deposits, they are now demanding higher rates. So banks like Truist are now coming under fire and they're going, crap, our margins are getting squeezed. We can't even put out the loans we are. So this is how the real estate market gets affected. The only reason your house is worth X is because people are bidding up and they're like, oh, it's only a couple more bucks in the payment. Who cares if the interest rate's a little higher? Or, oh, you know what? I'll bid asking price because it's only going to affect the payment a couple bucks. Who cares? It's because your house is worth X based off of loans. If we didn't have a society where you could just go up and literally put pretty much nothing down on a house and just get a house loan, home prices would be barely anything. Because if you had to come up with the money cash, you look at the average American citizen and how much they make and how much they can save over, the cost of electricity and all that kind of stuff, insurance and car payments, all that kind of stuff. You go, well, nobody could afford anything. Homes wouldn't be worth what they are now. It's because of leverage, because of debt. So Truist Bank is now seeing that borrowing costs to fake that they have all the deposits are going up. And type 1 down below, if you believe that those borrowing costs are going to go even higher throughout the rest of this year. I personally believe they are. It says right here, that caused its net interest income to fall 6% from the first quarter, which was worse than expected. Net interest income measures the difference between what banks earn on their loans and what they pay for their deposits. It's going to get worse. Can't wait for quarter 3 numbers. What do you think it's going to be? Do you think they're going to lose 6% again? What's your guess? Because in the last quarter, because we're walking through quarter 3 right now, right? Borrowing costs are going up. 10 years going up. It's amazing. I think you're going to see them lose between 10 and 12%. All right, in quarter 3. Truist is the nation's 6th largest bank by assets, according to Federal Reserve data, but is still much smaller than coast-to-coast industry giants such as JP Morgan Chase or Bank of America. Mid-sized financial institutions came under intense investor scrutiny following the turmoil last spring. We're already back in this. Remember, when this story was written, we hadn't had 2 more banks crash. Pretty exciting stuff. That scramble pushed up deposit rates across the industry as banks scrambled for funding. Many regional banks warned it would act as a drag on results while reducing estimates for the rest of the year. At Cincinnati-based Fifth Third Bank, the nation's 17th largest banks, deposits rose from the prior quarter and the year ago period. Its earnings per share, however, missed expectations. Its net interest income did rise, but the bank trimmed its full year forecast. So you have all these banks where deposits are rising and they're actually losing more money because they're fake. They don't have all the deposits they claim. They have to go and borrow them because they made exorbitant dumb loans to a bunch of people that they can't afford. So they got to go out and borrow more money. Deposits. Isn't this ludicrous? As this comes collapsing down, you'll sit there and see why it's so important to get ready for this now, because you're not going to want to be late to the game. You're going to want to be gobbling up these prices, these foreclosures, and these REOs, these bank-owned homes, as much as you can. It says Key Bank, a Cleveland-based bank that is the 21st largest in the U.S., reported net income of $287 million, which was down 46% from a year ago and 8% from the last quarter, but slightly better than analysts feared. And the term analysts feared, quote unquote, is a very real issue. Analysts are fearing the worst. You should be too. This isn't doom and gloom. This is what's really happening. And if you agree with that, do me a favor, hit the thumbs up button because we just got to wake people up. The total deposits we're talking about KeyBank. The total deposits rose slightly from the previous quarter and were down slightly from a year ago. Revenue and net income, interest income fell 11% from a year ago to 1.6 billion and 986 million respectively. Its stock rose 4% on Thursday. See, that's what's going on. Bad news is good news. The other regional bank reported results after the one other regional bank, reported results after the market closed. Capital One, based in McLean, Virginia. All of us have heard of Capital One, right? Type 2 if you heard of Capital One. It's a big bank. Said its 1.4 billion in profit was down 30% from a year ago. That beat consensus expectations. This is insane. All of the banks are hemorrhaging right now. Like I said before, Federal Reserve got a call from over 700 banks last September saying they're insolvent. The FDIC came out and leaked a video leaked from last November saying the banks are collapsing. Do not tell the public. We've got to keep it out of the public's eyes. There's a certain amount of time you've got until the public figured out and they go running and pulling deposits. And we literally have a good old-fashioned barn burning bank collapse. This is serious. It's exciting if you're ready for it. Guys, I'm going to put that link down below, the 80% off to the crash course, the real estate, how to prepare for this crash. Once I do the foreclosure section, it will never be this low again because that's going to bring a lot of value. And I think we're at like 31, 32 lessons. I'm putting a new one out tonight on that course. Hope you have a great day. The Economic Ninja. Ha, no, I am the real estate ninja. Why am I giving my brother? He doesn't deserve it. The real estate ninja is out.